pretty substantial.
Let's jump on this. Am I being punished because I have good credit conversation?
There you go.
No, you're not being punished. The FHFA, the Federal Housing Finance Agency, has an obligation to try to create, their mission is to try to create more affordable housing. And there have been a couple steps taken this year to do that. One was the lowering of some funding fees for the VA and mortgage insurance for FHA loans to make them more competitive. And one of the things that the Fed side was worried about was if we continue down this downward trend in rates, that there'd be an avalanche of refinances, and these loans would be, due to the rules that they put in place in 2008, 2009, mortgage companies would be forced to repay investors for loans that they had just purchased because they were refinanced inside of a term period. So what that means is I can't charge you an early payoff penalty for paying your loan off early because you took advantage of something. But we as a company are obligated to repay the investor. So we can lose largely inside of that 6 months EPO period. And the Fed thought that this was a danger for the economy if something like this were to happen. So that's how this kind of started down this road. And then they also put in some tiers that made it slightly more costly for someone with better credit. But does that mean that you should lower your credit score to get a better deal? No, you're still going to get a worse deal. You just wouldn't get as good of a deal as you would have before. And these are loan level price adjustments. They put these things in all sorts of places. The first thing that they did 2 years ago, when second homes were becoming, while mortgage rates are still very low, people were going out and buying second homes, and then they were turning them into Airbnbs. And the Fed considered that a risk. So they took a huge LLP and placed it on second homes, so it became more costly from an interest rate perspective to buy a second home. In doing that, that slowed down the purchase of second homes because they feel as the economy slows, what's likely to happen is that there will be a softening in the Airbnb investment rental market, and those properties will be the first ones that people walk away from. They won't walk away from their primary mortgages, but they'll walk away from this investment property that's no longer performing in the way they wish it would perform. So how does that affect the LLPAs that are in place now for purchasers and refinancers? If you're someone who has purchased a home, put down 20%, no mortgage insurance, you're probably paying a slightly higher rate, and it's going to be more costly for you to refinance. And the reason that they did that is because you were the target audience that's going to refinance. You should most likely have the cash to execute a refinance down the road, and you definitely have the equity to get to a lower rate. Whereas someone who maybe took an FHA, so they're at 96.5% debt to income, they don't have the cash reserves necessary to execute a refinance. So even though they wanted to get to a lower rate, they don't have the closing costs to able to fund the refinance. So those loans aren't going to be captured, and they're not going to hit investors, whereas your loan, you're going to take advantage of that as soon as you have the opportunity to.
That's a good explanation. What do you think about this?
Dude, I think it's the government. I mean, I don't think that this is like,
this
isn't some socialist, like, we operate inside of the, I've got my opinions about all of this, but at the same time, there's already all these rules in place. You're not going to you can't unring the bell that we already operate inside.
No, I get that. But what do you think about it? Do you think it's equitable?
I think that this is one of the better things that they have done. But from how it affects everyone perspective.
What does that mean?
I think that the government does things all the time that I think are effed up, that I generally disagree with. I think this has there's a penalty. You're already paying these penalties in many, many ways that you don't see or complain about. The story talks about this is happening May 1st. Investors have priced this in. Everyone who's complaining about it is already, either unaffected or they didn't know that they were affected by it when they locked their loans and all these other things. Like it's something that people were up in arms about that they didn't know that they were mad about.
Well, I mean, it's a talking point because it's in the news cycle.
Well, it's the way they did it, right? It's the way they, it's the clickbait
No.
scenario.
Yeah, of course. So let's
found out-
feed the rage.